Pre-1933 gold. When will gold again break $2,000 an ounce? Twice in 2023, gold has broken above $2,000 but could not hold that level. When will gold close above that level for good? This is Coins Roc. Stay tuned as I try to explain. Lately, gold has been in a downtrend, with prices around 1930. Gold can't seem to catch a break. Meanwhile, while prices are down, buyers of pre-1933 gold find that the numismatic premiums are still strong and prices are holding up better than bullion pieces. Let's look at what factors move the price of gold. The biggest influence on the price of gold appears to be the Federal Reserve and Jerome Powell. Right now, interest rates are high and are expected to move higher. Because inflation is still high and gold is often thought of as an inflation hedge, you might think that gold would be doing better, but that's not the case. High interest rates lead to a strong dollar, and with gold priced in dollars, this is bearish for gold. This will be the case until rates start falling and stop rising. There are many opinions as to when this will happen, but no one knows for sure. Second is economic data. There is a lot that goes into this. The stock market, unemployment, jobs growth, manufacturing, GDP growth, and much more. Basically, a strong economy has a tendency to push gold prices down. And right now, the economy is relatively strong, which is also bearish for gold. A third factor is supply and demand. The demand has been strong. Central banks around the world have been net buyers of gold. The U.S. Mint reports record sales of bullion American gold eagles. Purchases from India and China have been strong. But the supply has been slowly increasing, both from new mining as well as scrap gold coming to market. The balance between supply and demand tends to offset each other, and currently this is not a big market mover. A fourth influence is inflation. While inflation tends to push gold prices higher, the Fed is slowly pushing hard against inflation, and it's expected that inflation over the next few years will come down to a lower level. This is also bearish for gold. Currency movement is another strong influencer on the price of gold. A rising dollar pushes gold prices lower, and lately we've been having a strong dollar, another bearish factor for gold. Last but not least is uncertainty. And the world certainly has an abundance of uncertainty. There are just too many to list, and who knows what tomorrow will bring. In these uncertain times, gold performs well, and all the uncertainty is very bullish for gold. When you put it all together and look at the various factors that can move the price of gold, I come to the conclusion that there are too many variables to predict the future price of gold with absolute certainty, especially in the short run. It looks like until the Fed starts lowering interest rates and weakening the dollar, that gold likely will have a hard time moving up in price, breaking and staying above $2,000 an ounce. No one knows when those rate cuts are coming. Long term, I'm very optimistic about the price of gold, but short term, a coin toss is as good a predictor as any. If you're a gold investor, you're probably hoping for a higher price, but as the old saying goes, hope is not a good strategy. If you've been buying pre-1933 gold, your numismatic premiums have helped hold up values, unlike holders of gold bullion coins who have seen a decline in value. Meanwhile, buying any gold is a long-term proposition. Thanks for watching. If you learned something, please subscribe, comment, and like.